Hi, everybody. Welcome to our quarterly market update. I have Mathieu Roy with us today, VP of Equities with Lewisburg Investments. How are you today, Matt?
Terrific. Yourself?
Doing good, thanks. Um, Matt, we have a lot of clients asking a lot of questions. Investors have questions. It's been a tough year. I guess one of the main questions I think is on everybody's mind is, will central banks be able to slow down the economy without causing a recession?
I don't think so, but I don't think it matters all that much. I think the key is central banks need to see inflation coming down. I think we will. I think there's a lag effect. So our prediction is we're going to hit a mild recession, but we're going to finally see inflation start to cool off, and you'll have central banks being able to relax their policies to a certain extent. So we're expecting a mild recession, but not a deep one, and we're expecting inflation to cool off, which will give the ability of central banks to pause on their hike policy.
And what else, from a macro perspective, would be impactful for you as a fund manager, but that might not actually be an everyday news stream today?
For me, it's China. China used to be a hot topic of discussion every day, everywhere in the news cycle. Doesn't seem to be quite as much anymore. But I think if you look at their COVID policy, for example, it's having a significant impact on global economic growth. It's having impact on the supply chain, which affects inflation, which is key to every economic debate that we have today. Plus, we have this tension with Russia, which China has historically sided with. So we feel that it can have positive or negative implications from an economic and political perspective going forward, whether China decides to ease off on its COVID policy, for example, or it decides to take a more positive stance in siding with Russia.
All right. And what are things that you and your team have done within your mandates in response to the current environment? Where do you see value in your markets?
Well, frankly, I feel our Canadian equity strategies excite me today. You're getting a lot of commodity exposure, which I feel are starting to have their day in the sun, and there's a lot of valuation upside in a lot of those businesses. Plus, you're getting very strong consumer staple businesses. We have a lot of exposure within the grocers or dollar stores in Canada. And finally, as we talked about, high growth tech used to be an expensive area of the market, and that part isn't expensive as well. So we feel that we're terrifically positioned with a lot of exposure within commodities, but also high growth tech and some safety with a lot of strong, defensible consumer businesses.
And lastly, investors have reason to worry. It's been a tough year, as most people know. But going forward, how is your fund positioned, and why would it be a good time to invest now going forward?
Well, we know it has been a difficult environment to invest in 2022. Markets have been weak across the board. We're now talking about a recession. So why are we excited? If you look across what we're able to buy today, for example, in the Canadian market, it's attractive almost across the board. Commodities, which haven't had their day in the sun in 10 years, we feel we are at the beginning of that because we've had so little supply in the market. We feel that fundamentals are very strong for their pricing. They've found discipline in terms of returning cash to shareholders. So valuations are very attractive, fundamentals are strong. And now we're also able to buy high growth tech companies on sales, which is great diversification for how the Canadian market is composed. We're also, safety is not very expensive either. You can buy grocers, you can buy Dollarama, you can buy utilities, telcos at inexpensive prices. So we're very excited about the prospects going forward for the returns that we can get from a lot of our businesses and from our strategies.
Thank you very much for your time, Matt. As always, very insightful. And we'll catch you guys next time. Take care.